I like to use a school. In a school, we're going to put it in a private group. Only us can hear. Because you see, I have a full guide that cost me $750. I'm going to share with you, and I can guide you how to become an investor. But I don't think we need to go through all the theory. That will be like that the $1,000 classes sell you anywhere. Let's go more practical. Let's do things together. Let's get a deal done. That's, I think we're going to learn much faster and enjoy more because we're going to be making money. So let's go to the book. Fiore, you've been absent for a while. You lost me. Fiore, we'll talk, Fiore. We're going to go over this book. Fiore is hands off. We just want to use it as a guide for the words that you need to learn in multifamily to understand the words, the lingo. Let me pick up my notes.
Okay.
My notes. And the first things I liked was in page 15. Introductions, blah, 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 blah. No. Page 15. On this, in the first part of the chapter, he talks about being he was a stockbroker. And he compares that's why it's one of the good things we need to know why we should love real estate. And he compares real estate to stockbroker. And he says, when he was a stockbroker, his life was crazy every morning. He would get up in the morning, he didn't know if he was rich or poor. Because actions come, I mean, you don't control at all the stock. So he doubled his money, he lost everything, he doubled his money. Now, he says, when I went into real estate, he didn't even know anything real estate. I mean, after you get it done, after you own properties and you keep going, you don't ever lose back. You don't lose back. It's slower. You don't get rich fast. But when you understand real estate, you just keep growing and growing and growing. And that's why, I mean, I like that concept because I do work not to work. So I like things that are not complicated. And I think, yes, real estate is one of the less complicated one. So that's the concept I like on page 15 when he says, hey, he can do anything. He did both. He handles only $500 million of properties right now. And he still thinks real estate is the best investment. Is it for everybody? Yes, it is for everybody. Study markets. And then on page 15, he tells you, okay, this is not an easy task. You need to study the markets, buy right, operate them, then achieve consistent, predictable results. That's what you want to do. I mean, I love when people go and say, okay, I want to buy. Yeah.
Hey, sorry. I don't know if we're on the same version because I have the PDF. So when you say page 15, mine is like a breakdown of a bridge loan.
That's chapter 1. It was chapter 1. It says the hands off to real estate.
Oh.
And please share the PDF with me too when you have it, if you can. But then,
oh, actually, you know what? I think this is it's all just it's only the charts. So there's no
chapters.
There's no
on the charts.
Well, yeah.
That's open.
It is, but I guess it starts much later.
We'll deal with today, Ned. Do it, and then we'll figure it out for the next one.
Okay.
If you kind of follow the because it's chapter, it's about in sections. The section is section 1, investing in syndication. If you don't have that section,
Oh, yeah, it's chapter 1, right?
yes,
Hands off.
chapter 1, hands off, real estate, section 1, investing in syndication. Just already using the word syndication is already a lot. I don't know how many people really understand what is that. But let me go back to the sentence that I want you guys to be real about yourself. Okay, if you're going to do this business, you need to study a market. You need to have a market. If you start going all over the place, oh, let's buy in California, let's buy in Texas. No, you're not, we don't know, you don't have the system yet. So you want to take us all the gambling get the gamble out. The gamble is you learn a market. So he said, study a market. The market behaves in one way. We are very lucky. We have a market today next to us. Alapata, Little Havana, Fort Lauderdale, we saw with you, Ananan, all that is growing, changing. So there is a market there that you can make money with. It's not Coral Gable, it's not Doral that you don't have money to make with. Kendall in multifamily. So study the market, buy right. Yes, that's key. It's ridiculous the prices they offer you in LookNet or all our site. You need to know a price. You cannot gamble. You cannot go there and buy. You need to know the price you're willing to pay. You want to pay. Because now saying that you are an investor, you're not just a buyer. You are an investor. You need to do research. How to operate the building? I don't think it's so hard. I mean, it takes some learning, but that part is easy. It's just that it's work that you have to do. And then achieve consistent and predictable results. That's the key. I told you guys, when we bought the first building, okay, second building, third building. After my fourth building, like, okay, we keep doing the same and we're getting the same results. I said, we know what we're doing. And by seeing one building, I was seeing 20 that I didn't do. And that's the more you want to do, I don't want to do them. Yeah, you want to learn why you're not doing that building. But that doesn't mean you're not doing that building. It means you need to make the building a business. But if you don't have your model of this is what I need to make money, you cannot create the business. What I mean by create the business is alternative financing, less down payment. You figure out there's so many ways that you a building that nobody's buying, you can make money on it. But that will be learning. Page 15 still. He said something that I like the page. I didn't know. Okay, I knew I didn't see it, and that's why it's so crazy that you go back to read a book that you read it so many times and you listen something that you forgot you listened. He says you can do leverage. Leverage in this way. Okay, when you put down 25% and you leverage 75% with a loan. Now, if this building in 3 years goes to 125, which is very easy, okay, you're talking about 3 years, 6%, 6%, 6%. So add 25%. If you did something right to the building, it's not so bad. But then you just double your money. Because you bought it, you put only 25 and now it's worth 125, you just double your money. Because you owe 25% of free and clear. When you divide that for rule of 72, you divide 72 into 3, it gives you 24%. That's a return of 24% per year. You guys know rule of 72?
Yeah, can you elaborate on that? I'm not familiar with rule 72.
Okay, Einstein created this rule. It's called Rule of 72. That it helps you to understand when do you double your capital. So if you divide the number 72, let's say, onto 36%, it gives you 2. That means every 2 years you double your capital with compound interest. So it's like, if it's key to when you want to think fast, what interest I'm making, you can use the number 72. Is number 72, you divide it by interest, tell you how many years. Or if you want to say, well, I want to double my money every 5 years, then you divide, or let's say every 6 years, you divide 72 into 6, give you 12. You need to make 12% to double your money in 5 years. When you go into big buildings, there is another factor that we don't talk about. We don't talk about because it's big. That is when they tell you equity X, your X, which is they tell you how many times you double your equity or you build your equity. You invested 25, say 3X, well, you're going to get 75%, you're going to get 75. In how many years? How you multiply your equity. Why we don't talk? Because we didn't buy yet. When we're in these basic conversations in between us, we're still not buying. Like, I can't tell you all these fancy words to describe equity. Let's keep it simple. Remember, I always say I didn't do this business before because I didn't see how much money you can make. Now, if you follow that rule that I just showed you, you buy a building $1 million, let's say $500,000. You put 25%, so you put 100,000, 20%. You put 20%, $100,000 down, and that building next year is worth 600,000. So it went up 100,000 in 3 years. You just double your money. You only put 100 in 6 years. You're going to have 100 more. That's a lot of money in investments that you can double your money in 3 years. Is understood that number? Because that's an easy way when people, because remember I told you, when somebody told me I'm going to make $800,000 in this, I said, no, it's impossible. I'm showing you why it's possible, because since you have not done it, you have not lived it. And it's hard to believe somebody that is selling you a building, telling you, yes, you're going to make so much money. You need to see it. And the only other way to see this is go and study in the market things that they sold, what year they sold, 3 years later when they sold, and you will see the bracket, you will see the big gap on prices. And that's when you see, yes, you can make a lot of money if you buy right, manage, if you do everything right.
Just using the 500K example.
Yes.
You're saying that you triple your money
Double.
based, you double your money. So you put 100,000. So you're saying that the property would have gone up 100K?
100K in 3 years, which is
In 3
going
years?
like less than 7%, which is very normal.
Right.
Because it's 7%, I mean 100,000 divided, but 10% will be 50, so it's like 7%, 70, less, like 6% plus 6% plus 6 will be 18. That will be almost 20, and that will give you 600. So now you have a building that is worth 600, you only owe 400, so you have $200,000. One you put it in, the other one, the building made it for you. You put 100, you have another 100, you double the money.
Mm-hmm.
And I will suggest that, I mean, because yes, it's always cycle, but usually it's more steady. You always think about, 3 years. You need 3 years into a building to make good money. To make sure you can get.
Right, you still have to pay the loan on the 300,000.
Sorry?
You still have to pay the loan on the 300,000.
Yes and no. Meaning per month you want to pay, it has to be rented.
No, understood. Yeah.
And then you never pay that. That's another part of, you don't pay the loan. your tenant has to pay the loan.
I think-
That's why that was the leverage of the 75%.
Yep, yep.
Again, right now we're just not selling each other. We're telling, yes, this is the truth about why multifamily accelerates the single family. In single family, you still do the same thing. Numbers are the same, but I think it's multifamily is less people doing it and accelerates the situation. Then on page 19, he was talking about syndication. That's a word that you want to know. What is syndication? Do you guys know what is syndication?
Getting a group together.
Yeah. And what do we do with the group together?
You,
It's basically having, I guess, different groups for different parts of the capital stack.
Yeah, but now you're complicating things because you know too much. Make it simple.
Like, so you have different groups for like you have a collection of investment for the down payment. You have a collection of investment for, um, I don't know about the loan portion, but
No, you're misleading everybody.
okay, then I don't
No
know.
guessing, no guessing, no guessing. It has to be firm, firm. You have to be a Spartan.
For the down payment and for the management.
Yes, yes. But like, okay, syndication is like yes, and I say it's a group of people, but always there's going to be a GP, general partners, that are going to like we are when we do the things with you guys, we're the GP, we manage the whole thing, and the other people is LP, limited partners. So they're not going to have any power on the decision, but yes, we're going to split the money however we say we're going to split it. That's how America is built. Tell you all the big corporations, everything is by under syndication because you need a group of people to invest to invest these large amounts. Then what Anandan was explaining is we don't want to explain that now because there is so many ways you can split it. Okay, but let's make it the simple one. The simple one, like you were saying, first you need a general partner or a sponsor, meaning somebody that knows something and is creditable for the bank, and they're going to lend you the money to do the project. That's the sponsor or the general partner. Then you need operating partners. And that's when you need to understand another part that people forget. You know the management. Yes, all the management is there. That you get rents, get leases, do marketing, rent the place, manage the place, maintain the place. But then there is something called asset manager. That it doesn't do so much work, but it still does a lot of work. If any of you have bought properties, you know how many papers the bank asks you. When in commercial, they ask you 5 times more. And when you want to refinance, they ask you 5 times more. They ask you all the income for all the properties, for each of the tenants, your income. So it's like there is more work to be done. And that's called the asset manager. Also, that asset has to pay all the bills. Because even if you manage the building beautifully, but you don't pay the taxes, guess what? I mean, the city will foreclosure on you and take you the building. So they need to pay the things, and they need to give money to the investors, blah, blah, blah. That's the asset manager. Why is it important to do that? Because if you're going to do syndication one day, you charge fees for all those work. If you don't charge fees, you're going to work for free. And you're not going to like it. Then there is the funding part. Whoever gets money in gets paid. And then that's what I say, LP and GP. Those should be a very basic syndication. And in the book, even after he goes explain each of them. But at least you know the difference between syndication or a group that gets together and do a joint venture. No, this syndication is system. Schematic. Most of the people have to be accredited investor to invest. This is what I call blah, blah, blah. It's beautiful, but it doesn't give me how to buy one tomorrow. How do I make money tomorrow? But you need to know those words. So when people talk to you about that, you know what is that. Leverage. Accredited investors. You understand when I say accredited investor? Do you know that what is an accredited investor? Okay. Yes, you need to make 200,000 K a year, $1 million in assets, blah, blah, blah. You need to be rich in order to invest in this type of syndication. Do you ever see anybody being audited? No, unless it goes wrong. If it goes wrong, then everything goes south because they're going to audit your investors and they're going to find out how did you get them. Please didn't get it through propaganda. Then he says in page 31 something that is very important too. What is more important, the sponsor or the property? Who is more important, guys? The sponsor or the property?
Sponsor.
Still, the property.
So if you're going to race and you have a hockey and you have a horse, what is more important, the hockey or the horse?
The horse.
Both. If you give me the best horse in the world and refuse me to race, I'm going to fail. I'm not going to. You need both. You need both, and that's key. I mean, no sponsor can make a property magically good, and if the good deal is good and it's poorly managed, you are still screwed. So both are very important. So what he's saying there, don't get caught in the building because you're going to deal with his sponsor. You need to check the sponsor. You need to know his experience. You need to know what he's doing because he has control of the money on the project. So you need to have control of both. He says that everybody always go only after the deals, and it's not about the deals. It's about both. You need to know what you're doing with. Deal is important, but it's called the sponsor too. Then he talked about the process. We're going to talk about the process in the future. So we talk many times about cash on cash, internal rate of return, equity multiple. Those when we go advancing the book, is going to be more examples. So right now, it's okay. The process is yes, you invest, you put money down, you get a loan. First, what price contemplate acquisition, second, make okay. He says financial analysis, and I like the three things he says because many times we don't do it right. He has a different way of seeing things. He said there is three things you need to do. First, what price are you contemplating to buy the building? Meaning he's saying, what comps are you using? What is the value of the building? You need to know the price. And of course, if you're going to buy, you need to know the price. You cannot expect the realtor to tell you the price. You need to know the price. Second, you need to know that's another part. You bought this to make money, so you need to know how to do the performance projections, the pro forma, the income. You need to know how to evaluate the income of the property. You're buying a business. You're not buying a house that you're going to rent. And that's why he's emphasizing this, because when you go into multifamily, it's a business. You need to understand the cash flow, how it goes. I mean, what are my expenses? What are my income? Because it's for the income. Underwriting the debt, how much capital you need, and performance. Then he goes into underwriting the debt. How much debt can I afford? What type of loan? He's saying. And Capital needed, very important. If you don't think about the reserves for not performing, for not renting out, vacancies, or any fixing that you have to do, and while you're fixing, you cannot rent. So you need to really understand the P&L, the T12. You need to know if you're going to have manage money to manage all the expenses every month. That's the other part that we look very easy when we do these things on Thursday, but when you're buying, you need to do diligences. You need to look the 12 months. More because there is some months that are better than other ones. And what I like about it, that he's telling you to do it, you might read it, blah, 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 but I've been there. If you don't do this, then the deal might not work. So you have to go through these steps to make sure you buy a good deal. He talks about an example that is crucial. Somebody's selling to you, he's showing you only 10 units on a 50 units apartment. You're crazy. You need to see all the units. Because of course he's going to show you the 10 best ones. So you cannot, go to I want to do deals. Yes. But if you buy wrong, you're screwed up. You at least when we're buying last week, these $17 million deals, we had to see at least 70% of the property. And it was risky. But we can see the ones all outside. We want to see all of them. But it's important that you really inspect the units. If each unit, depending how many units you have, if this a lot of units, okay. But it's only 8 units, well, 2 units out, and you don't cash flow. And how long it takes to fix it. And if you have a problem with the city, then you're going to foreclose. He's also, okay, that's another part that I want to say about the book. Remember, he does indications. So you need to read between the lines because he's going to put you fear, tell you don't want to do it alone. Give me the money and I invest for you. So he's going to put a lot of fear of what can go wrong. Because when I was seeing this part I was reading back, I saw a bit of negative. And it's not negative. Oh, let's say concern. Oh, be careful. No. He was not careful. He would not have bought all the things he bought. But remember, at the end, he's a manager of a hedge fund. He needs to get your money to invest with him. So he needs to make all the things very complicated. So you say, no, I prefer to give you the money. Assets. He plays with the words. I think it's just Mark where he says, he asks the person, what type of investor are you? What do you do? And that's sometimes because you're not clear with yourself, you're so eager to make deals, you can say, I buy houses. Or I buy foreclosures. Then are you telling me what type? Are you telling me the sector or are you telling me the strategies? And more what he's trying to show you is like, okay, what is your sector? He calls it sector. What do you buy? And what strategy do you use? You need to know. And sometimes, because you're not buying, I don't know, even when you're looking to buy, to rent, what are you looking? Remember when we always spoke to you, say like, we like value add. So it's called the sector, it's called the class of the building, the type of place I'm looking for. There is class A, B, C, D. So you need to have a system of what you buy, a model. You need to know what you want. So now you know that model, you know the cost of the model, you know the outcome of the model. You cannot make mistakes. The problem is you start buying anything, anywhere, now we have a problem. The same 8 units in Little Havana is not the same price of 8 units in Homestead or North Miami or West Palm Beach. So it's called sector, which is the type of property or the asset class. Usually top class is class A, class B, class C. We always buy class C and class D sometimes. It's just not such a nice area, older than 30 years, less desirable, maybe it's vacant. That's what they call class C. The building is run down. Not so bad, just in not good shape. So by now, if you know what you're buying and you buy always the same 3 type of buildings, you cannot make a mistake because then you know the price. But you're going to make a mistake if you say, I buy anywhere. I do. No. Now we cannot buy anywhere. We buy what we know. Then
I have a quick question.
Yes.
Where do you find the class of the property? Is that in Miami, like in Miami in the website? Is it
No. Nobody's going to tell you the class because I will not tell you my building is a class C. The realtors the brokers, the commercial brokers know that. The commercial realtors, they know. So they know when you say class C, you're not buying a top office. The same thing if you say, I'm going to buy a class A, don't show me a building that is not perfect. But it's subjective. Yes.
It's a little subjective. Okay.
A little. But usually it's like saying Coral Gable is going to be class A, unless it's an old building. And Alapata is going to be class C, because in Alapata, unless it's out of the market, I mean, something different. And then he explained all this blah, 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 buy and hold, buy and flip, buy and watch. I like it. He says he created. For me, that's the best thing you can do. Buy and watch. What he says is, okay, buy, fix it, rent it, and watch it till it's the right moment to sell for any reason. So you don't have, I'm going to sell now, or I'm going to sell in 12 months. I'm going to sell when it makes sense to me. And that's a very nice strategy, but you can do that when you know how you went in, what money did you put, whose money, what you told people for the money. Like the building we buy together in the squadron is to sell. I cannot tell the guys, hey, let's hold it. 14 people, let's hold it till we can sell it. No. So it's a nice thing to say, but remember, you are creating your model right now. So if you can say, okay, I'm going to buy this and I'm going to buy and sell whenever I'm ready, as long as you cover the expenses, start making money to you, you're good. So it's again, you need to set your mind what I'm going to buy. Because you're going to buy backwards. Okay, that's what I want to make, how I want to make money. Then I go back and I buy this way, so I buy right. If not, I don't buy. If it doesn't perform, I don't buy. Jeez, so look at the time. Indicators to watch. And then you talk about all these indicators. Okay, they're blah, 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 but they're true. I mean, we buy in Alapata because we already did the research. We know that the rental is growing. We know that the population is growing. You don't buy somebody that is Amazon just moved out and it's a desert town. No, you don't buy there. So those indicators, the key cores indicators that are there, they're very good. But they're common sense. So I didn't even put it down. Yes, I'm going to check the rent growth. Yes, of course. Vacancy. Market vacancy, yes. If everybody, all the buildings are empty, I'm not going to buy there. Why am I going to be the special building? I'm going to fill it up. So the part of indicators, yes, they're good. I just didn't pay attention to them because I cannot go over all of them. Now, you made me talk a lot, guys. Next time you have to talk, you have to tell me what you read good in the book. We said it was going to be a mastermind, not a Luis mind. But I love to talk. I'm a problem. I don't let you people talk.
I need a book.
The book is you can buy anywhere. I will send you a link from my daughter in Amazon. Buy it used. It's like for $5, $10, I don't know.
I just sent you the file, Louis, on the chat.
Okay, I will check that file to see.
You can see what the version differences are.
Right. Then let me share this screen. Did you ever go to a class or a class of multifamily or buying or real estate investing or anything? Did any of you went to a class? Well, a class, I mean something like a week class, not one class.
I wouldn't say specifically multifamily, no.
And the other guys, you never went to a seminar to learn how to invest?
No,
That's
just
good.
like
So I can tell you anything, you're going to believe me. That's good. Okay, you're seeing the Excel, no?
yeah, it's
Okay. This is what I want to do with you guys, because that's perfect example of what we need to do to find a property next week. And that's the part that we need to talk to each other. Say, are we doing it together? How are we doing this? Together meaning, remember, my objective is let's find one, let's sell it, let's make money. I'm not saying let's put money to buy one. We're going to be wholesalers. But this is all you need to do is, like everybody will tell you, pick a market, put together your team. We have the team, we don't need a team together. Find private money for deals. Well, we say we're not going to buy ourselves yet. We need to know more. We're going to wholesale it, so we don't need it. Yes, we find money, but we don't need this. Evaluate deals, yes. You need to know how to evaluate deals. I do that on Thursdays. That calculator, that's what we use all the time. And then we use more but that's how we start. You need to know how to use that calculator, but not only to put the numbers, you need to understand how the numbers move. Make offers. If you don't make offers, you're not buying. Negotiate the deal. That's another big thing. How to negotiate a deal. This will take time to learn because there's so many options. Sign the contract, blah, blah. Yes. Always have an attorney to read your contract. Yes. I tell you, all the buildings we buy, unless we buy with a real estate contract, when many times you're going to deal in commercial is your own LOI contracts from the lawyer, so you have to have a lawyer read all that. That's another big point he has in the book. You have to have a lawyer to read your contract. You're crazy if you don't do that. Equity investors, private lenders. Yes, you always have to be looking for money because then you can do more deals. Hire an attorney to prepare syndication. He's building you to do a syndication. We don't have to do a syndication, but still we need to hire an attorney that we want to work with. You can use ours, or you can use the one you like. Seller documents to do due diligences. This, yes. Of course, we didn't get to that point. That's when you are already into the contract And that's the due diligence. That's the real thing. You cannot make mistakes there. You're buying already. You have only 1 week to probably, or 10 days to back out. You need to know what you need to ask, those documents. But those are common sense, guys. I mean, your lawyer is going to ask anything about the building and the permits and open permits, so you don't worry about that part. What you need to worry is about the T12. The rent, all the rents with all the expenses for a year. 2 years, even better. You cannot read from like we do in the analyze that we do annual. You need to do month per month to make sure that you're not missing an expense. That the flow of the money makes sense. Inspect, yes. Inspection is before. Yeah, no, it's right here. Doing due diligence. Due diligence. Tough word for me. On-site inspect leases, document units, yes. The leases, very important. You need to see the leases, how long people is going to stay there paying little money or a lot of money, or how the lease was done. Term sheet with the lender. That's when you know what you ask. You ask the lender, but you know what terms of loan you want to get, and you know how to check the lock rate. The rate is locked by the lender, but you are accepting it, and that's when you have a deal. When you get the term sheet, kind of like what they call the commitment, and that's when you know you have a deal. So this is we need to figure out how you guys want to do it, because I don't think we want to be this passive that we talk about. We're too passive today. That's okay, the first time. We need to figure out how are you going to look for market, how are you going to look for properties, how we're going to evaluate deals on your own. I will do it once, but it's not to get together to do one. No, it's to get deals.
Should we decide today about the market?
Mm-hmm.
Or we need Ryan?
No, Ryan will go along with that. Besides, in the market, you don't have much decision. You know, to go to the market, I know, because I'm not going to go to study Ocala. If you tell me, yes, I want to study Lehigh, because everybody's buying Lehigh, good, you can go. I don't go to Lehigh. Go to the
Where's
West
Lehigh?
Coast. Huh?
Where is Lehigh?
It's up north. Everybody was buying Lehigh now. They're
Oh,
building
interesting.
50, 100 houses per month. We have a beautiful market, guys, in between Silver Bluff, Shenandoah, Little Havana, Alapata, Windward, Grand Vista Park. We have the best market there. But what we need to figure out, and I'm going to send you in the chat. Okay, you want to figure out the sector. And by that, I mean the sector was the type of property. And we can do that model. Okay, a duplex is this much. This is the type of rent I need for the income. We can set up the model. And if it's not within those numbers, then is when you analyze. They're like, okay, why this is so expensive? Because the owner is crazy, that's his problem. Why this is too cheap? Oh, because it has violation. But we're going to, when I say pick up the market, we're going to set up a duplex is worth this. Maybe we can hit some numbers like a 2:1 or 3:2 and you will have already the price that you need to buy at or need to be at in order to see if it's a good deal or not. Time, private money, yes. If you have money, talk to me. If you have private money, talk to me. Let's buy it. What do you think? How do you want us? How do we want to work? Ananan, you're the most experienced one here. How can we work as a team? That we're not
There's a lot of
different.
pressure to say I'm the most experienced. I don't think I am. I have the same.
Well,
I'm new to this also.
Fiore has not bought a multifamily yet, and she's trying to learn
Yeah.
multifamily. Mark never bought even multifamily, so yes, you are. We did so
I
much
haven't
the last
done
3 weeks. The last 3 weeks with $17 million deal, we went up and down in many strategies.
I'm probably 2 weeks ahead of everyone else.
That's a lot.
Okay, so sorry, what are we saying? How to pick the market or what to do
No,
next?
no. Give me an idea because, guys, I'm aggressive. I'm going to make you work. I'm going to make you do things. How aggressive you want to be? Because this, for me, is okay. I tell you what is, I read your book. I tell you the things. I tell you the beauty. But you see, I don't know, what we were doing last week had nothing to do. We're not talking about the concept. We're like analyzing things to happen. But that's what we want to do.
Yeah. I mean, I think maybe if we have maybe what we could do is if you give us like a sample property and then we we do whatever analysis we can to say whether it's a go or no go, and then we can review it at the next meeting. And I don't know if that should be a group projects where we all work on it together, or maybe the first one we do it.
I think that's the only way. I mean, remember the pyramid of knowledge. If you're not in the game and analyzing and talking, if I talk, you don't learn shoot, guy. Because I can go. I mean, no, you need to be thinking. They just send me 2 properties off market. I'm going to make you sign an NDA. You know what is that? Like non-disclosure, because they send me things that I cannot promote. So I need to make sure that you don't guys go there and promote these properties because they send it to me under the table. Meaning the guy that has it doesn't want 15 people talking all over the you don't understand. There's so many groups that they grab one house, they put it here, 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 here. The same person put it time. Suddenly the house is burned because everybody has a house, everybody has a different price because the wholesaler they keep on putting money on top of the top of the top. And people get upset with us, like that house is burned. Everybody has it. So anyway, so I'm going to do an NDA for the group when I give you deals, and I give you real deals that they give me every day. You start analyzing them, and then we don't have to wait till next Monday or something. Hey, are we ready to we do a quick chat and we do a quick Zoom? It should take us only 15 minutes to analyze a deal, but sometimes we don't have a week for the deals. We don't have a week for the deals. The deals they disappear in 2 days. So if you wanna, which I think that's the best way to learn how to analyze, I give you deals, you analyze it, and we go in a random and say, okay, this is Samar time. You need to do it and explain it to us. And when you do it wrong, then the next time you're going to do better.
Can we though? I think that sounds great. I know finding deals are like the most time consuming, which we really don't have. But it would be nice to talk about kind of how to find deals. No, like I don't know if anybody else, Anan or you are interested in that, but
There is no magic about finding deals.
no, there's no.
All the ones that sell you a deal is blah 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 blah. You find deals with contacts.
Okay.
I will show you. I mean, I can send you I mean, I have a list here of how you have. But one thing that people will not do is pick up the phone and call all the commercial brokers. So I want to find deals. Give me a realtor that can send me deals. Or we can go to MLS and find all the realtors that just talk.
Would they be considered off the market deals?
Well, they don't mean, I tell you something, markets mean the deals doesn't have to be off market to be good.
Right.
The fact that it was in the MLS doesn't mean it's bad. It's just only bad pricing. But right now, what you want is source of people to send you. Like these people that just send me these deals today. They know who we are, they know we buy, and that's why they send it to us. Because they're wholesalers, they need, I need to close in 30 days. So to find that, if you tell me, oh, Luis, pay me $50,000, how to find that? No, there's no way. It's just, I go to a network, they know us because we've been buying, and that's how they know we buy. Then yes, you can send letters to all the people that has buildings more than 20 years. And there's all these other ways to do it that is very passive, that it makes us right now faster. If you call them, they call you. They call me all the time. Do you consider to buy another one? No. Are you considered to sell one of your properties? Because they have a record of who owns property. So are there systems like that? Yes, there are systems. I mean, you can Google, there's this company that one friend of mine is working. He said that they're paying Google Ads because people go and say, I want people, I buy properties, they go in this portal and they pay you for a click, they sell you the leads. Those leads cost $50 easily. Are there any good deals, leads? I don't know. But these people, they gamble because they buy many, 100, and in 100 years, they're going to find 3 deals that are going to make 100,000. So they don't care to pay $50 a deal, a lead. But you guys are not ready even to get that lead. So they give you that lead. By the time you want to buy or sell it, you lost it.
Right.
And that's the part that Samar, I mean, I see what you want to do. I see because I always see. And I'm not saying I'm right, but you want to do everything. I want to know how to buy, how to do this, how to do this. It's more. Join. You need to do it in a team. At the beginning, it has to be a team. You cannot do everything. You cannot find the deal, find the money, fix it, sell it, buy it. Right now, I think if you concentrate first in evaluating deals, making sure you know the deal, you know the bank, the best loan, how to buy it, you have some contacts there, you have construction contact, then you're set.
Okay.
And then you have to have money. That's a lot. Guys, no, we're fine. 8:33, I thought it was 7 to 8. We're fine. So I need from you to put in the chat, think about it, and then say, like, how do you want to work? If you want to work like that yes, we can read the book fast, 15 minutes. It took too long today because people arrived late. And then we go into what deals have you analyzed? I have I will show you. I mean, if you go to my channels, because guys, you cannot ask me you don't know. You need to know. If you go to YouTube, let me get YouTube. YouTube. Let me share that screen. Second. Share. You say, how do you find deals? you do a TikTok. Say, I'm buying properties in Miami. I have an investor call me. I buy cash. I buy ugly houses. And that's it. People are going to call you. That's a way to find them.
That's trademark. I buy ugly houses.
You know that it shouldn't be. I mean, I don't know. I was in a litigation when I was in a company because they want to call a law mortgage freedom, and the lawyers told you cannot put a brand into the language. You can be Nike, that is not nothing, and you can put Nike, but the just do it. You can. That's not right. Even though it's a trademark, it's not a trademark because that is English. Where's my computer? Select home. Okay, I just share, and it's like, okay, share should be this one. Share. So if you go into YouTube, you're seeing my YouTube, no? Are you seeing YouTube?
Yep.
Okay. First, everybody should be already signing this channel as my daughter channel. I have 141 people. I need to get that to 1,000. Everybody has to go and subscribe to that channel. But no, the one we also have multifamily. Multifamily partners, Miami partners. It's Miami multifamily partners. There we have many of the recordings of Thursdays, so you can go over them and you can learn how to analyze I will send each of you the calculator. But you have many of samples there of the ones we analyze every Thursday. So you can do it on your own. So I'm going to send you 2 deals that I have not even analyzed. And then I'm going to put a number of each of you, throw a dice and say, okay, this is the order. Next meeting is this person, ta, 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 ta. And next meeting, that person needs to analyze the deal and explain it to us. That's the only way you're going to learn how to do it. And on Thursday, we can practice, but on Monday, one of you is going to explain the deal. Or we can use Thursday too. Thursday I'm going to do more podcasts. But here should be how we analyze deals. Okay? And let's see if we can start like that, at least so we accelerate the situation. Because the more you know about how to understand the deal, the faster you're going to find deals. And then we can move in the second part of like the loans or all the rest. But let's learn how to make a deal. It's easy, guys. Just need to think like the calculator. Any questions? No questions?
So you want us to just pick something and analyze it, or you're going to give us?
I'm not going to send you 2 that just sent me today off market. Just don't post it anywhere. It's for us. And we're going to analyze that on Thursday. So if you're ready on Thursday, you explain it to me.
But Thursday, you mean in the general call?
Yeah. The general call is ours. We do it for us, and the rest they can listen to us. The other people didn't invest anything, so they're not in. So it's like I'm tired of Thursday. I talk, then they show up one day, and I know, and they never show up again. So Thursday is going to be, I'm going to bring somebody like I brought the day Michael to talk to us, and then we analyze deals for us. So whoever's going to be there is people like you that are doing things and they want to buy a property this month.
Okay.
But isn't Thursday like I guess because I know you said these are off market, they're like private. Wouldn't it like I guess
We don't have to put the others.
I gotcha.
We don't put the others. One thing is okay. This is okay. Okay. It's important. Yeah. You guys don't have MLS. Samar, you don't have MLS, no?
I don't.
And do. Well, use. I tell you, the best two websites is Zillow. Still is a good website for rentals. I will also use Realtor.com because it has less garbage. And Realtor.com is better than Zillow. Zillow, everybody can put properties, so then you have 10 properties with 10 different realtors, the same property. But
And now
Realtor,
he's
hmm?
and on he's a realtor? You're a realtor?
Yes.
Oh, okay.
Yeah, I just got licensed not too long ago,
Nice.
so I'm
He doesn't like my company, so he doesn't want to work with me, but I'm convincing him.
Good.
so yeah, I'm new to it, so I wouldn't really say I'm an active realtor.
Yeah, but the key about being a realtor is having MLS. And if you are not using it because you didn't go to a training, it's free training in YouTube. Because at
Oh,
least,
I can get it as
huh?
I can get the MLS without being a realtor.
No, you can get a training, but you cannot get MLS.
Yeah.
We can talk about it. I will talk off the line. I cannot this record. I talk to you. Since you're helping me with bigger pockets, we can do something.
Okay.
Guys, let me go because I have to go to the gym in the morning. I get up at 5:30. I will send you the properties tomorrow morning, probably not today and now and that, and send you these links. Fiore is also quiet today, Fiore. We lost. This is not capital. This is not credit cards. If you go to videos and you click here, it says more. Get my daughter's Facebook to buy the book.
Okay.
You can buy it used.
All right.
Don't buy new.
Okay.
Well, guys, talk to you soon.
Bye. Thank you.
Bye. Thank you.
Thank you, Luis.
Ciao, ciao.
Thanks, bye.
Bye.